Good morning, everyone. Welcome to this market update for the 2nd of September. And we've seen the NASDAQ and the Russell 2000 break out in previous months. And the S&P has really been lagging for quite some time after setting a really strong spike in January of this year. We've gone into a 6 or 7 month consolidation. Well, that all finished last week with the S&P breaking out. And pardon me. And whilst it's overbought in the short term, it's certainly looking very, very positive. And all the overwhelming indicators are that the market will continue higher into the year end. Apologies for the lack of video last week. I just had absolutely no voice whatsoever, so it was a physical impossibility. And as you can hear, things have improved quite a bit, so that's good. And it was also a pretty productive week on the markets as well. So lots of exciting things happening. So in this update, I just want to have a look at what I believe are pretty much undeniable trends that are out there. I know that a lot of people are still really nervous about various things, China and trade negotiations and, all sorts of things. But look, those issues or something like them always existed, always have, always will. But markets punch on regardless. And if you look at the facts behind what's happening, particularly in America, it's very, very exciting. The American economy is in reasonably good shape. Yes, they've got a massive debt problem at the government level, and at some point that will be an issue, but it's not now. Could be 5 years, could be 10 years, could be longer. I think one of the important things in America is that consumer debt has come down enormously, and with very low unemployment and business confidence now moving much, much higher, consumer confidence is higher, the valuations in America aren't stretched. It really is a terrific scenario, and of course the American market sets the tone for the rest of the world. So if the American market is bullish, then the rest of the world is certainly not going to be negative. I want to have a look at some of the, just quickly highlight some of the best sectors in coming months based on earnings growth. And at the end of the day, it's earnings growth that propels prices higher. So this is not just my wishful thinking that we're in a bullish mode. These are the facts about where earnings have been and where earnings are going. And of course, everybody would know that watches these videos that earnings season in quarter two came through extremely well, as high as ever. And we saw an average growth of 25% for the quarter, which is just enormous. So there'll be the normal stock and commodity trend updates. And the addition in Portfolio Analyst last week was I think was a really good one. I did a review of cybersecurity stocks, which have really got a rocket under them at the moment. There was another amazing technology company came to light in Australia, and it promptly jumped up by I think by about 26 or 27% on Friday. So I reviewed it on Wednesday, and on Friday it went up 26%. So there's a lot of those sort of very exciting things happening. And I also did a review of a couple of local stocks that I was very bullish on, and they got smacked very hard by the market. And that can be disturbing. It can be really upsetting for some people. But my conclusion was that they've been very unfairly smacked, and that we're highly likely to see a rebound. So I think Portfolio Analyst has, since I started it a year ago, has really transformed, and it's providing far more value beyond what I initially envisaged. My initial plan with Portfolio Analyst was to respond to some people that had some questions, that wanted some assistance, but didn't necessarily want to be a member of the full membership programs that I run. And so that's how it started, but it's sort of rapidly transformed and now has a very heavy focus on both training and education, which I just love doing, and especially around technical analysis. So on an ongoing basis, week to week, I think there's an enormous amount of value in Portfolio Analyst, quite apart from the recommendations. I think the recommendations has become almost a bonus, and between what the members are asking and what I'm also putting forward, collectively, we're just bringing up some stunning opportunities. And we've had an Australian technology stock that is just about tripled. It's been reviewed 10 times since September last year. There's an Australian healthcare stock that has been building up to a breakout and finally did so on Friday in very powerful fashion. That had been reviewed 6 times since April. The list goes on. So I'm really excited about Portfolio Analyst, and if you haven't taken the free trial, I'd really encourage you to do so, because I believe there's just so much value on an ongoing weekly basis. I'm not aware of any service in Australia that provides this sort of level of ongoing week-to-week education. Anyway, enough of that flag flying. Let's get on with the valuation of the markets. The S&P was up another 27 points on the week, managed to break out above 2,900 points. And the very encouraging thing for me is, if you look at sector by sector, and particularly a sector like financials that haven't really moved yet they've just come through a period of pretty good growth, and the forecast is for 45% earnings growth in Q3. Now, over the last, as long as I can remember, going back at least 5 years, so that's at least 20 quarterly reporting periods, I cannot remember the US market not achieving the forward forecasts, because they do tend to set them reasonably conservatively. And so with the expectation that the financial sector is going to grow at that rate, eventually the share prices have got to follow. It's just not going to happen that they're going to continue to sit where they have been. In addition, we're seeing strong forward forecasts for technology at the broad level, and then also, of course, as it breaks down into all of its various components of cybersecurity and software and internet, etc. Also, healthcare has got quite strong forecasts for forward earnings growth as well. They've already got momentum, unlike the financial sector, which doesn't really have much momentum at the moment, but I think inevitably that will have to kick in. But technology and healthcare are already moving. There's good opportunities there, and with the forecast growth rates, I think that's going to continue. So I'm very bullish on America, and very excited by the opportunities. Within technology, I think it's hard to go past cybersecurity and payment technologies as the two sectors that have got the highest momentum. And you've also got to look at where all the social trends are going, where all the business trends are going, and the drivers for those two sectors look to be pretty much assured going forward as well. Now, as far as the S&P goes, there's only been 7 times since 1928, so 90 years, where there have been successive gains on a month-to-month basis in the S&P index for April, May, June, July, and August. So those 5 months. It's only happened 7 times since 1928, and every time the market gained into the end of the year, and gained by an average of around about 7%, if I remember correctly. So history, I mean, this doesn't guarantee us anything, but history is absolutely on our side when we've had such a strong period of gains across the weakest part of the year. Then generally the end into the finish to the end of the year, get it right, has been positive, and quite handsomely positive. So that's the US market. I'm very bullish on that, and I think we're going to see some good performance. US dollar was flat again for the week. It was volatile. It was down initially and then recovered on Friday. And it's really just responding to all the twists and turns in the trade negotiations. And the market seems to be just hostage to it at the moment. People are trying to second guess what's going on. And you've just got to step back from that sort of mess at the moment, because it'll frankly do your head in if you try and make sense of what's going on a day-to-day basis in the market. So let's jump in and take a look at the American stocks, and we'll start with the big picture first of all. So this is the monthly chart. This is the bottom in 2009, and you can see we had a couple of months of the market pulling back in February and again in March, and then we were down again slightly in April. But then since then, we've had those 4 months straight up. If we come in and zero in on a daily basis, you can see we've finally broken out above. First of all, we broke out above that 28.73 level, and that was the all-time high, and we managed to hang on to that, even though there was a little bit of downside on Thursday, as you would expect. We are overbought. As you can see, the RSI is up above 70, but that condition can exist for some time, so that's not to say that the market is going to pull back very far, but you can see that periodically it does pull back below the 50-day moving average, even in strong trends, or at least it comes back to it. So we had a very strong period of trend here from November through to January, but even during that very strong trend, you can see we came back and we touched that 50-day moving average on at least 4 occasions. So it's unrealistic to expect that that's not going to happen again. So I think we've got a very good uptrend, but you will get dips, and dips are going to provide very good opportunities, I believe. The rest of the indices look terrific. If we look at QQQ, which is the Nasdaq, the ETF covering the Nasdaq, you can see new all-time highs, and they were set a long time ago. And even the small caps, just showing how broad this rally is. After a period of consolidation for a couple of months, has now broken out again and set yet another all-time high on Friday. So extremely robust. US dollar, we got up to 97. We pulled back to 94.5, and then we've made it back to this key support and resistance level. But while I'm here, let's look at what's happened. So in effect, the US dollar hasn't really done anything in fact, we could really go back to here. The US dollar hasn't done anything really in a year. It's been enormously volatile, but is at the same level as it was a year ago. But if you look at the Australian dollar, and a year ago we were trading at around 78 cents, and now we close down at 71.96 on the weekend. So you can see we've broken another little short-term low. We've got support at 71.5, so that is quite close. So we may see a little bit of a pause around that level. But I think a lot of this is because particularly iron ore prices have been under pressure of late, and that's certainly not helping the Australian dollar. But below that, we can go down and we could look at the lows of January 2016, which is about 68.5. So look, the good news is, as well as the US market performing well, if you've got money over in America, then you've got a tremendous tailwind from the currency. So that's a real bonus as well. Just while I'm here, we'll look at the Australian index. So we managed to make about 70 odd points, I think, pull back on Friday. Certainly the upheaval here with the Prime Ministership certainly did impact the high dividend stocks, and particularly the banks, because the the assumption now is that Labor's almost certain to get in, and with Labor will come this change to dividend franking credits, which obviously is the reason a lot of people own the banks, and hence the banks have been under pressure and other higher dividend paying stocks. No, I won't make a political comment. I'll leave that alone. I'm just flabbergasted, frankly, that anyone of either side of politics could come up with a policy like this. But anyway, there you go. Aussie stocks, the Aussie dollar, as I said, finished 71.6, and our index rose by 73 points. We're in earnings season now. We've seen some terrific results and some good responses in the market from stocks of all sizes, but particularly with small and mid-cap growth stocks. Any little miss at all is just not being tolerated whatsoever, and price falls of 20 to 40% in a day are not uncommon. The treatment handed out for relatively short-term or temporary misses is just extraordinary. But I guess that's the way of modern markets. We have, however, seen some outstanding gains in some of our healthcare stocks, both big and small, and certainly technology stocks. And the point I would make is that most of those stocks are not household names. So unless you follow the market fairly closely, you've probably never heard of most of these stocks. And again, that comes back to, I think, one of the real values of portfolio analyst, and that's that there's a whole platoon of eyes that are out there looking at the market, looking for opportunities, and members are asking questions and asking me to analyse stocks that I've never heard of, and I cover the market very, very thoroughly. So it's a very exciting period, I think, and there's some technologies in Australia that I was oblivious that were going on in both healthcare and technology, and if only we can develop and retain that technology and that intellectual property here in Australia, it'd be fantastic. Let's move on to precious metals. Gold was down. It wasn't down sharply. It was down $6, down to $1,200. We obviously broke 1,200 the week before when I wasn't able to conclude a video, but we've done a little bit of a bounce back, and I think that was inevitable because gold had just been sold down to levels that were reminiscent of 2001. People just didn't want to have anything to do with gold. Absolutely hated, oversold in terms of price, oversold in terms of sentiment, and also not consistent with what we're seeing with the potential for trade disruption. I mean, I don't think it'll happen, but at least the potential is there that global growth could be impeded. And if global growth gets impeded with debt levels where they are now, that's a significant problem. And yet gold is acting like there are no problems at all, and that just didn't make a lot of sense. So from a contrarian point of view, not surprising to see gold bounce back a bit. But I believe the US dollar is probably on balance going to move a bit higher, and that probably means that gold is still going to remain under pressure. Now, when you look at precious metal stocks, GDX really does look very precarious, and I wouldn't be surprised to see further downside in that. But in Australia, and I don't tend to mention specific stocks in this weekend update. But I have mentioned it a few times, and I've been on the bandwagon of Northern Star now since 2011, and I still, in my view, I believe it's the premier gold stock in the world, and they've just done a deal which I think the market is showing signs that it's going to like a lot. And I don't know of too many better performing gold stocks anywhere in the world. So if you're going to own a gold stock, that would be the one, in my opinion. Let's look at gold. So there's the gold price. We had a breakdown below 1,200, and then we've had a bit of a bounce back. That's on the weekly chart. If we look on the daily, gives you a bit more detail. But let's go and look at GDX on a weekly basis, and we're sitting right on support. We were unable to bounce, and we closed on the lows. Not looking good for GDX, and I think there's every chance that we break this support and we head down to $13. So that's the global majors. That's the top 16 or 20 gold producers in the world. All right, let's move on to other commodities. Copper was steady at 272. The fears, the way that I read this is that the fears of a global slowdown, which is only assumptions at this stage, are outweighing the supply and demand balance, which is favourable for copper. So I think the short-term fears are playing out in the futures market, and that's what's holding copper down at the moment. Now, crude oil did manage to rebound to 69.9, and all the indications, both fundamentally and technically, are that we may be entering an age where the crude oil price is going to be less volatile. It's going to settle into a tighter range. If you think back over the last 5 years, we've seen crude oil fluctuate between $140 a barrel and as low as, I think, got down to about $30 a barrel. I mean, that makes it incredibly difficult for companies to plan when you've got that level of volatility. So I think if we are going to get a tighter range for crude oil, then that's going to provide more predictability to forward planning, and that's going to be positive, I believe, for the oil companies in general. So I'm still keenly looking for opportunities, and there certainly are some good signs, particularly around US producers. There's the spot copper chart, so not a lot of change there, and there's the rebound in crude oil. So to wrap it all up, look, it's trade negotiations that are causing a lot of this back and forth in the very short term in the market, but they will be concluded at some point. America's done a deal with Mexico. They'll do a deal with Canada. I'm sure they'll come to some sort of terms with China and with Europe, and life will go on. And I think some analysts have been saying that the trade negotiations will never be concluded with a good outcome. Well, all I can say is that what existed was not a good position for the US. The US were being incredibly disadvantaged by the trade position that's been in place for decades. So the trade situation was unequitable. I'm not comfortable with the way that Trump's going about it, but at least I'm, I guess, comfortable with the fact that he is doing something finally. And no matter what you think of Trump, he's doing a lot of good things. And business confidence in America is through the roof. Consumer confidence is through the roof, and there's a reason for that. And I just wish we could get some of that political will and in Australia. That'd be a huge bonus for Australia. I think there's too many wild assumptions being made, and the market's just being held hostage to that in the very short term. And as I said earlier, you've really got to stand outside that. Look at the robust trends. Cybersecurity is a really robust trend. Global mobile payments technologies is a really robust trend. So focus on those. I remain very bullish, not because that's my predisposition, but I think I've got very good factual basis to do so. As I said earlier, short term the US market's overbought, and I would see any weakness as a buying opportunity. Portfolio analysts this week, there'll be some more strong opportunities. There always are, and we're continually reviewing previous recommendations. Most of them have been good, but we also review the ones that necessarily haven't gone so well also. So that's it for this week. There's my contact details. The Portfolio Analyst free trial is available. It's available once, and then you're provided with the opportunity to join. That's it for this week, and let's see what the coming week brings. I'm sure it'll be exciting. Cheers.